segment of the show and summing up with our topic of discussion in the last 20 minutes. In here, we're going to be looking at first the challenges faced by the microfinance players in their space. Richard, if you're to break down for us some of these challenges that you're facing and how, let's start with how the challenges mainly.
Okay. Challenges to all microfinance is the payment. But for us as Unify, we've resolved it with a proper repayment plan. Our emergency cash is basically 1 month, and we give you 10 days period to pay. Then we don't only focus on the 1 month. As I said, the challenge has been paying back, most because they're paying and they're unable to pay back. And their microfinances have been, for instance, if somebody is earning a net of 500 and he has come to borrow 3 million from a microfinance, you realize that he will be unable. We looked at all those affecting factors, and one of them is that we looked at the payment period, and we said this person is able to roll or reloan the balance if he's out of the 300,000 he has borrowed. If he's able to pay 100,000 and roll it the month as a new loan, that gives the person more time to pay it back than pushing them to pay what they don't have. Okay. Number two is that we looked at also the problem. They are saying that, you know what, borrowing much money to somebody who earns, if somebody earns 500 and you give him 3 million, you find that it will be hard to pay. So for us, we looked at, we considered the gross payment on the pay slip, and that's what we consider to calculate your first loan. So for government organizations, they get 100% of their gross payment as their first loan. Why do I keep on mentioning first loan? When you get 500,000 as your first loan, as I told you, our system is built on trust. When you pay back that 500,000, your income levels increase. You receive a message that you're now eligible for 750. So it will cease to be, but because you showed that you can pay back, so your rate will increase to 1 million, to 1.5, to 2 million. Then from that level, you reach a level of what loans go for about 7 months, and they come from about 3 million and above. So, but without security. And so we looked at those problems affecting the microfinance, and we're like, you know what? It's majorly, the major problem is payment, and we handle it in those two ways. Okay. You can roll your money to the next month, and also we can give you money that you're able to pay as an emergency loan based on your gross. So your net can be 500, but your gross is 800. So for government, we shall give you all the 800, knowing that you'll be able, that's your first loan, you'll be able to pay it. And when you pay it, the system recognizes your payment plan and rewards you more money and tells you now eligible for maybe 1 million or 1.5. It keeps on increasing based on what you pay back. So it's a trust issue that you're trusted to pay back, that your limits will increase drastically.
Okay. Yeah. So, and looking at some proposals, I would say about the regulations of the Uganda Microfinance Authority. Yeah. And in your point of view, or in your own perspective, which way or which are the suggestions that can make these regulations better? Which regulations do you feel should be added onto?
Okay. Yeah, actually, I'll look at the regulations that we have, and I think I'll only point out one in particular. We have a regulation in our Microfinance Act, and under the Tier 4 Microfinance Institution Act, we have facilitating, one of the regulations is facilitating the microfinance industry to promote social and economic development. And that's the area I want most finances to look at, and that's where they are failing. You know, if you're looking at the social and economic development of the person, what do you have to tell that lender? So the lender comes in with a problem, but are you able to develop them economically and socially? One, as Unify, what we've done, what we're doing is basically, first of all, we are thinking, if you're in this problem or this emergency, are you able to care about your family? That's why we give you the 5 kilograms of rice. So we give you these 5 kilograms of rice as a social gesture that, you know what, you need to be comfortable home, you need to eat food as much as these issues are happening. The other one is that we also tell you, refer a person and get 25,000. So let's imagine you've referred a colleague or 10 colleagues, that is 250. Where is not part of the loan. It's not part of the repayment loan. Actually, if you take somebody right now, in 20 minutes, you walk away with 25,000 if you're already a customer. So the thing is, how economically, that 25,000 becomes 250 in 10 customers you've referred, even if it's in one day. And we tell you, use it to buy, for example, goats. Okay. If you bought 3 goats, and we tell you, like, at the end of the year, our financial loan consultants and the branch managers are really good at that. People, you've gotten this money, don't use it for something. Buy some goats, for example, and then with those goats, they can multiply to 6 goats. If you bought 3 goats, maybe at 50, you can use 100, buys the goats. In about a year, you'll have maybe 6 goats. So when we tell them that we are economically, we are not only telling them to borrow money to fulfill their emergency, come back again. And that's where all microfinances are failing. For them, they're looking at to getting the profit, but not helping this socially and economically. So first, I've just picked up one, which is to facilitate what UMRA, which is Uganda Microfinance Regulatory Authority, is doing. It has ensured that all microfinances have a social factor, have an economic factor. Not only customers, but also we also do social corporate responsibilities. Yeah, I didn't want to mention names, but we are working out on programs with one of the biggest hospitals. We are working out with like prisons, like to facilitate of their sports games. You know, we're actually reaching out to sponsor some of these events and all that. We have to be part of the Rotary Cancer Run, and those are some of the corporate social responsibilities we're looking at to see that people, and as people be okay socially and economically, then they'll be able to come for purposes of growth, but not purposes of just borrowing to satisfy the need.
Okay, Richard, now the perspective of starting up a credit institution on a tip 1 or 2, 3. What are the basic points for anyone or any business person with the idea of starting up the institution?
So as you know, our economy in Uganda or East Africa at large, people come into this business with a focus of getting a lot of money out of it, profit. They're looking at 50% profitability. But for us, I'll tell you that from our point of view, we're focusing on how do we make people's lives easy. So and that's our slogan, making life easy. So if you look at how do you make a person's life easy, there are so many sectors you can look at in a person's life, or so many issues that is it the shelter? That's why we make housing finance. Is it the business? That's why is it so? When you're starting a microfinance business, what is your target market? Now, as Unify, so far as per now, our focus is on an employee, because mostly in the private sector, I talked about the government, but also we give private sector employees. Anybody employed is able to get this emergency fund or emergency money to cater for his emergency, and he goes back to work. In the end, we are facilitating production. That means our tip is actually the person's life easy, so that he's able to work diligently and he earns more money. But most microfinances came in with problems of people, but as well as gaining 50% profitability. That when you come with that mentality that I will start a business and I'm going to make money, then you will not money, because there are times where people will not be on time, pay on time. There are times you have to be in their life. But I'm giving them money, but it's not that I have to push them so hard. So number one tip is focus on making people's lives easy. That's the only tip, and that's what we're doing as Unify. When you focus on that, then your business will flourish. You will not look at there's so much profitability. You will not look at there's so many things you're gaining out of this, but this little you get, you'll be able to grow because your customers will grow because they know you're touching a point that affects their life.
Okay.
Yeah. So that's one tip I give people who want to start microfinance business, and all the others should also look into that direction.
All right. Yeah. Now let's also talk about something to do with the interest rates. What determines the interest rates most probably from financial institutions?
So most finance institutions are obviously like any other business. You're profound to make a profit. A business that doesn't have profit cannot stand on its own, or it cannot proceed. But we look at the level of profitability. I'll give you an example. If somebody, for those who, somebody is selling, I'm a born again, but I'll give this example. If somebody is selling beer at 3,000 and somebody is selling beer at 5,000, you realize that the one of 3,000 will sell all it all. 5,000 will have few remaining to finish the sale. So the things we shouldn't look at is so much profit, first of all. Yeah, a little profit will make us grow. So the thing is, as you said, how do we make this profit? So I'll talk about the interest rates here. For example, our interest rate as Unify, we don't have an interest rate that is communicated that this is this percentage. But as we said, we wanted to solve the problem of giving somebody money that he can't afford to pay back. So we look at your gross pay. We all earn different salaries, right? There's somebody earning 500, there's somebody earning 1 million, there's somebody earning 200,000, and all of them have to be in the inclusion factor. So the thing is, to include all of them, we decided the first loan, we focus on the gross payment. Yeah. So when the calculator calculates on the gross payment for private sector, if your gross is 1 million, 500,000, that is your first loan. So I'll give an example of a security guard who gets 100,000 and is under 120. That is 20%. Yeah, and then we look at a medium person who gets 300,000 as a loan from us or an emergency cash and is paying back 350. That's around 17%. You will discover that as the money increases, the lower the interest rates. So our rates depreciate from up to 8%. You will discover that if somebody is getting 1 million, is maybe paying back maybe at 13% or 12%. Yeah. So the thing is, the logic here is that there are higher risks on somebody getting low income than somebody who's getting much, because by the time you grow in that sequence, that means you've been able to pay back, and the system is able to notice you that now, since you're good at paying back, your interest rates should reduce. So we don't have a communicated rate that this is it, but when you come to our branch, we input your gross payment, million, the calculator shows that you're able to get 500, but if somebody gets 500 and the other one is able to get 100, the payback back is not the same. So it's a decelerating structure. From as money increases, the interests go down up to 8%. But most of these other creditors have fixed loans because they have not managed the problem of paying back and the capability of somebody to pay back. And that's why the problem is. That's why people are fighting. This man took my property because you've not really seen, is this person able to pay back? So with the gross pay, we are able to say that, you know what, this person is in this cap, is able to pay back this amount of money. But if we give him this 100,000, he's able to pay back, let his incomes increase. So when a security person is given 100,000 and he pays back the 120, and then he goes to maybe 300 and is paying back 350, you will discover that the interest has reduced to 17%. So when he grows 100, that means he has been paying back and his interest is able to reduce. So our interest rates are based on your level, and so if you come and your gross, with your gross you're able to get 1 million shillings, that means you're at a different rate from somebody who's able to get 100 shillings.
All right, now Richard, your last words to the borrowers, for example, what should they, at least, I believe all of us are possible borrowers at all costs. So what are some of the things that we really need to have or when is the right time to borrow, I should say?
Okay, when is the right time to borrow? Okay, thank you so much. The thing is, before I go to the last word to borrowers, allow me to say that we have an expansion plan in Uganda here, and we are running with 6 branches so far. That is Clement Hill Road, we have at Parliament Avenue, we have at Wandegea. Wandegea is located next to Abbey Clinic opposite Post Bank. We have Ntinda branch for all those coming from Nalia and Chwata and all those areas. Ntinda branch is located opposite Total, and it's on the building of Blue Mountain. The building is in the corner of the road going to Chambogo, and the one going to Chwata lights there. That's, we have a branch there. Country branch, which is active right now on High Street on Roo Complex. And then we also have Kabalagala branch, actually. I'd forgotten that one in Kampala. Kabalagala branch, and it's in the junction of Mienga Tanki Road. It's next to Equity on the same building. The building is called Central Plaza. So, but we're also growing in areas like Gulu. We are looking out for there, and we also plan to put in Hoima, in Tebe, those that are lined up, and Boyogerere for the industrial park and all that. So we are bringing branch business closer to you. But apart from the branch business, we also have an app which is *282#. When somebody comes for the first time, he doesn't need to go back there because we want them to start work. So they are able to transact on their phone, they are able to borrow, they are able to pay, and they are able even to roll the money to the next month using the #2#. The other one, maybe what I would tell the borrowers out there, Unify is the solution for the so many problems that have been happening in finance. When you have an emergency, look out for Unify, and you'll get this money in 20 minutes. We don't directly deduct from your payroll. We don't have hidden interests. Our computers are facing you. Our systems are built on trust. So all you need is a national ID you need a 1-month bank statement and a 1-month pay slip. And only those 3 documents, they are scanned and put in our system as your account details. We don't take anything. We don't remain with anything. All we do is scan and serve you. All these documents are to prove that you have an assured income, like the bank statement shows that you have an assured income coming to you. So you're eligible for lending or for an emergency, where you ask that who's the person who's eligible to get this money. The borrower who's capable of getting money is a person who has an assured income, is an employee somewhere, and he knows I'm earning my 1 million, but I have this problem along the month of 300K. So if I get the 300,000 and I sort it, I'll be able to clear that money. It's like you borrowing from me and saying, Mpaya Asat, I'll give 50. At the end of the month when I get the salary. So that's how the thing is. So the pay slip always is where we need to sort the problem of who. So the pay slip is a very important requirement. We look out for the gross and be able to give you your startup money or the first emergency money you get from us. So those 3 documents are the only important documents, and we walk away that in 20 minutes.
All right. Now your final remarks as we're winding up with our discussion.
So final remarks, first of all, is to thank Smart24 for this business program. We are businesses are out there and they are unnoticed, but since we are brand in different countries like South Africa, Zambia, Kenya, Tanzania, we wish to work with you more, and we're going to work with you more, I promise. As the marketing manager, I promise to be at least supporting the brand of business, because people need to know what is the solution out there. And Unify being a solution to lending, we are so happy to be here, and we appreciate, we don't take it lightly. The other parting remarks is to all Rotarians out there, participate in Cancer Run, be positive, help people out there in their need, and let's be together in all those projects and support them. And thank you so much. I greet all the Rotarians and basically those of Rotary Club of Kampala Wandegea. And also you're welcome to join us.
All right.
And serve the community above self.
Okay. And that is Richard Mutwafu, Marketing Manager from the Unify Credit. And we've been discussing something to do with the lending business, credit, challenges, regulations, and all that. And he says he's a proud born-again Christian. Good when you meet such people, by the way. And also in precisely someone who is confidently saying he's married, I should say. You know, it's very rare to find men of this generation. You sure you can?
Actually, thank you, Tim. I'm married to Shakira Narubawa, and she's the person who really makes things happen for me.
You know, we have someone called Shakira in here from our control perspective.
So I'm married to a Muslim who got born again, and I thank God for that.
Okay, maybe this particular package of rice will be heading to Shakira from here. I don't know, Peter, if you'll be getting that news in whether you'll be receiving news better, but anyway. Gentleman says he has a Shakira at home. Anyway, thank you very much for being part of that situation. And right now we're heading into a live feed for that particular perspective. And we're going to be heading out of the show, but later on switching immediately.